Crocs might be the only brand that I know that trades at a discount because people think the product is ugly. The market doesn't trust the phenomenal numbers, margins comparable to those of software companies, a growth CAGR in the mid-teens, and very promising international expansion.
I'm guilty as charged, as definitely being one of those people who, for better or worse, has felt Crocs are just too ugly to be a thing. But they continue to prove me wrong and have emerged as one of Gen Z's favorite shoes and are really everywhere on TikTok.
If they just keep executing at the same level, this stock could easily become a double. The big risk is that it turns out to be a fad and we see the business basically decline before our eyes.
After discussing Lululemon on last week's episode, today we are trying to understand the hype surrounding the unique and perhaps what you might already call iconic Crocs clogs. They experienced their first hype cycle in the mid 2000s, and I remember seeing them all over the playground back in the day, just when I was a little one. But from what I can tell, there was really this gap in their popularity until the brand reemerged once again in the late 2010s. And it feels like since then, the brand has just gotten bigger and more popular every single year. And to some extent, that's been true for the stock as well. It's returned about 150% since the start of 2020. However, while the business has seen significant fundamental growth since then, the stock is still trading at a substantially lower valuation than its peers and just an objectively low valuation. And I suppose today will be about determining whether this entry point is as excellent of an opportunity to invest as it seems, or if the Crocs hype is just a fad and the stock is a value trap. And for some reason, though, I have to say, Daniel, you don't strike me as a Crocs guy, and I'm pretty sure I'm not one either, but I'm hoping you can help us figure out how Crocs took over the world, because clearly, both with the fashion and with the investment, we missed the boat here. And more importantly, what we're going to want to figure out is whether the brand can persist over the coming years.
Well, believe it or not, Shawn, this episode has actually made me order a pair of Crocs. I know it's shocking, but if the product can even convince me, I think that's probably a good sign for the staying power of Crocs. Although, to be fair, I didn't buy one of their signature clogs, but a more modern version, I would say. And on the question about projecting where the brand will be in 5 years, I always say to friends who do not invest in the stock market that I can't tell them where prices will be at any point in the future, and there's nobody who can do that. And when it comes to fashion, I'm even more confident nobody knows what will be in and out of fashion in 5 years. Things that people love today are often seen as the most uncool things a couple of years later, and styles that were out of fashion 20 years ago suddenly come back. I still remember just a couple of years ago, I had these gold round metal glasses, and they were popular at the time, but my mom hated them because she said I looked like some dude from the 80s. And many things like that just come back randomly from time to time. Crocs, as you said, used to be a big thing in the mid 2000s, mainly in the US, but also internationally. I, for example, still remember my father having a pair, and well, now they're back.
I think I have no comment on the glasses, but I gotta say, I am surprised that you joined the Crocs bandwagon. Even if I don't love the look, they are very functional. I think, though, if I brought a pair home, I'm pretty sure my wife would probably burn them immediately. So, jokes aside, though, how about you give us some background on the company? I mean, this is one where in the comments and the feedback on our past episodes for so long, people have been recommending that we cover Crocs. And so it felt overdue, and it's a very popular pick in the value investing community right now. And, I was a bit surprised that Crocs ever even found their way outside of the US. I thought it was really just a US phenomenon. So clearly I was wrong.
It's interesting that Crocs has been probably the most demanded stocks in any of our comment sections. And so it was my pleasure to finally pitch this stock. And it really is more interesting than I initially thought. And Crocs was founded in 2002 by 3 friends who discovered a foam clog prototype made by a Canadian company called Foam Creations. And they saw potential in the unusual ultra lightweight material known as Crosslite. And they also licensed it to create a boat shoe that wouldn't slip on wet surfaces. And I guess it helped that the 3 of them were basically on a sailing trip at the time. So I don't know, they might have had some personal experiences with slipping thanks to unsuitable footwear. And the first ever Crocs shoes were sold at the Fort Lauderdale Boat Show. They sold out their entire inventory, which at that point consisted of about 1,000 pairs. And that pretty much served as somewhat of a starting point, and Crocs quickly gained traction in other comfort driven markets such as gardening, healthcare, and hospitality. And I didn't really think about it before, but when I record all the times that I've been in a doctor's office or the hospital, nurses always seem to wear Crocs.
Yeah, I've seen Crocs at hospitals too, now that you say that. And I'm probably reaching a little bit here, but the story somehow kind of reminds me of what we talked about a while ago in our Montclair episode, where you kind of mentioned how these luxury brands often start from a small niche with a superior product in that niche that evolves from there. And so Crocs is not a luxury brand, obviously, but it is a fashion story about starting as a niche brand with a superior product and then going mainstream. And in that sense, it is Lulu in a way, which started out in yoga and then broadened its scope and product portfolio over time. And in hindsight, the popularity of Crocs or yoga pants probably seems inevitable, but it was very much not obvious at the time whether these things were going to be just fleeting fads. And I think with Crocs in particular, people either thought or wanted them to be a fad, but it's formed something more enduring at this point.
Yeah, there are a lot of people who don't like them. I think that's fair to say. And we will talk about prices and financials later, but when you look at their margins and also the price tags of their shoes, I think people who call this brand's products cheap are kind of choosing the wrong comparables. It's definitely not luxury, as you said, and not even close, but it's not a low end shoe either. I'm getting ahead of myself, but Crocs has collaborations with many designer brands, and some shoes sell for hundreds and even thousands of dollars on StockX. And StockX is just a platform where you can, sell shoes on the secondary market. When I learned about the story, I was also reminded of Nike. They're obviously in a similar industry, and Nike used to be really focused on the brand too. And in their case, they focused on track and running. For Crocs, it wasn't the track, but the dog where they started. And another difference is that Crocs founders were already quite successful before. In fact, they were more or less retired, except for one of the three who had a bit of bad luck and slept on a friend's couch after losing his job as a computer salesman. Still, overall, they were successful, and that might be why they had, well, enough confidence to launch a shoe business where everyone would just first look at them and tell them those shoes are ugly. They will never really become a big thing. But their bravery paid off and Crocs became a thing. And after its initial success on, these boat shows, healthcare, and the first mainstream customers, they decided that it was time to expand the brand. And by the way, I'm already talking about Crocs here the entire time, but back then, the company was actually still called Western Brands. It only changed its name as part of, well, a rebranding to post the expansion. And they thought the product would just need broader identity.
So that's interesting because I never really thought about where the Crocs name came from, but it is a funky name. So how did they pick that as a rebranding target?
Yeah, well, they thought about what their shoes are made for and came to the conclusion that you should be able to comfortably wear them on land, but also when you're at the beach or in the water. And they just thought of crocodiles as animals that are comfortable both outside and inside the water, and hence they came up with the name. And back then, the logo was also a little crocodile, and the slogan was "Get a grip," which, in my opinion, is a pretty good slogan to have as their company slogan. Following the rebranding, momentum kept continuing to build. In 2004 alone, Crocs sold over 600,000 pairs, almost entirely through word of mouth, since they hadn't yet invested in extensive marketing or large-scale campaigns. And about the same time, a man named Ron Snyder stepped in. And you might remember when I mentioned that one of the founders was sleeping on a friend's couch. That friend has been Ron Snyder. And like the other founders, he already had quite a successful career, and still he started working for Crocs, first as a consultant, and then later on, he should actually become the CEO of the company.
So why did he take the position? I mean, did the other founders think that he would be better suited for taking Crocs to the next level as a brand? I mean, we've talked about it in other episodes before, but some people are better at starting a company from scratch and others are better at scaling it. And it does seem a bit counterintuitive, though, that the founders would give over the CEO position to someone else early on in the story when it kind of felt like there was a lot left to be done, it seemed, in terms of just building the brand into something that could then scale.
Yeah, I think it was somewhat of a mix in this case. I mean, the company was still very young. And if you ask me, founders that had the vision to launch shoes looking like this and turning it into a business probably also have the skill set and creativity to take it to the next step. But apparently, they thought Snyder would be the better man for the position and perhaps also have a bit more vision, at least on a global scale. Because Duke Hanson, one of the founders and the guy who slept on Snyder's couch, he said that, quote, Ron got us thinking big. He said, you can be a worldwide force. So to their credit, placing Snyder as a CEO worked out pretty well. One of his first major moves was acquiring the original supplier of Croslite foam. So that was the technology used in Crocs shoes. And that way, Crocs basically owned the material and the manufacturing process, which gave them much more control over product, margins, and IP.
Okay, so yeah, I was wondering about that. I mean, that is very smart. You don't really seem to see a lot of Crocs knockoffs even 20 years later. And I'm wondering too, is this also a benefit for them today when it comes to tariffs? Or did they at some point shift production to Asia? And if not, that would be a huge benefit for them in this current environment where the tariffs are changing every single week. And even if it currently looks as if Nike and Lululemon and these other retail brands with leverage and pricing power are able to handle the effects of tariffs pretty well, of course, not having to pay tariffs at all or being able to reshuffle your supply chain in some way can help.
That's a great point, a great question. But since Crocs originally produced their shoes in North America and specifically in Canada, unfortunately, as so many other brands, they do not produce the product now in the US or in Canada anymore. Most of the product is produced in Asia, just like so many other companies do. About 50% is from Vietnam, 20 to 30% is in China, and I think about another 10% in Indonesia. So some production also takes place in Europe, as far as I think, but for tariff purposes, I guess that won't help them either. I think that tariffs won't be a big problem for Crocs going forward, though. In one of their latest interviews, management said that they continue to see strong demand, especially internationally and in Asia, and that the cost of tariffs, if they should sit in around or at a level of about 10% for the rest of the world, would cost about $45 million of incremental costs. And at the time of the interview, there was also still the triple-digit tariff on China in place, which would have, according to the management, resulted in about $130 million in incremental costs. Fortunately, I would say it looks like we will be on the lower end of all that now. But yeah, getting back to the story, the globalization of Crocs was definitely a success, even though it doesn't yet help them when tariffs come. It's not his first year, they 10x their sales, going from 600K sold to over 6 million. And partly because of that success, they decided that it was time to go public. It was the largest footwear IPO at the time and went phenomenally well. Sales continued to increase and the stock 5x in a matter of a year. However, by 2008, it had collapsed just as quickly as it has risen. Of course, most companies face kind of the same headwind in '08, but Crocs, compared to other companies, just did not recover pretty well. Inventories piled up, retailers overordered, and demand slowed down significantly, even more so than for other retailers. Crocs posted a loss of about $185 million that year, shut down many facilities, laid off hundreds of employees, and the stock plummeted from $67 to just over $1. And at that point, it definitely looked like Crocs hype was just another fad that had come to an end.
The Crocs stock chart, as you alluded to here, I mean, it is quite a sight to see. A roller coaster ride is understating things. And I figured there would be some ups and downs, but there are multiple swings from these really huge tops to bottoms where it just looks like people must have been expecting the business to essentially go bankrupt and then it would pull back from the brink and rocket up and then fall back off again. And it's really kind of like the brand too. The stock, it just won't die, but it comes pretty close. And so I also wanted to mention to you, as you know, Daniel, we often discuss our personal experiences with a brand or company during our research to gauge what the other thinks about it. And while that can be helpful, it is still just the two of us exchanging our own biases. And it can actually be pretty helpful to get something like Google search trends, where especially for consumer facing brands, to see if there are these spikes in interest and how they unfold. And when you do that with Crocs here, you can pretty clearly see a sudden spike in interest in around 2007. And then there's this steady flat line. And then after about a decade, it surges back again in 2016 and 2017, where people are typing into their computer, typing into Google searches related to Crocs. And so I'm curious what actually happened in 2017 that led the brand to make such a comeback. It looks like they get this second life, and that does not happen very often in retail. And so was this just a random phenomena, or was it tied to some business change or some marketing campaign that successfully sparked interest in the brand again?
Yeah, the good thing for Crocs was that they were still used as some kind of utility footwear in the 2010s. So while they didn't grow and profit margins were very slim, as you said, they just didn't die. But it was only in 2016 or 17 that the brand really gained traction again, and quite a lot has happened until then. One of the things that initially caused Crocs to get into this problematic situation was what Charlie Munger would call diversification. The original Crocs were highly successful, but under Snyder, the company also started rain boots, sandals, and even some apparel. And honestly, I get it. If your entire brand is dependent on a single product line, it's usually a smart move to attempt to diversify. In hindsight, it's obviously easy to say that it just didn't work out and it actually hurt the brand more than it helped. But if they hadn't tried it, he would have been blamed for not doing it as well. Anyway, in 2013, private equity firm Blackstone had stepped in and they bought a 13% stake and started to push for a change. The first measure has been a full reset at the management level. Blackstone wanted some actual industry experts at the top, and so they brought in new faces, among them Andrew Rees, who is today's CEO. And they immediately started scaling back the vast product range and closed a lot of stores. After visiting a Lululemon store for the last episode, I actually Googled to see if there's a Crocs store here in Hamburg as well, and actually found one on Google, and it was one of the best and most expensive locations in the city. One of those streets where, Rolex, Louis Vuitton, and every other luxury brand that you can imagine sells their products. However, I learned that the Crocs store is permanently closed. I couldn't find out why and when it happened, but perhaps it was one of those that got closed when all that change happened. I guess saving rent on, a store and that ad was just not a bad idea.
So it's funny. I was just going through the Crocs website and I was trying to find some Crocs stores near me. And I confirmed that as I thought, I've never seen a Crocs store in the US, and there don't seem to be any true Crocs stores anywhere around where I live, at least. It all seems to be sold through wholesale, through Dick's and Foot Locker and places like that. And so I really am surprised to hear that in Germany, they were on the same street as brands like Rolex and Louis Vuitton as a standalone Crocs store. And I think it's pretty cool that you went looking for the physical store. I mean, I know people probably think that it's a silly thing to say and it's hard to explain, but being able to see a brand in action and holding the product, talking to the sales staff, that scuttlebutt research, that stuff can be such a big difference. And mentally, the way you think about a company and really just your overall assessment of the investment thesis. And so the point being, reading about a company can only take you so far. So kudos to you, Daniel, for at least trying to find a physical store to explore.
Thank you, Shawn. And when you looked up the stores near you, I think the main objective for Crocs is it to sell all their DTC online and then mostly going into wholesale stores for any physical location. But as you said, it's another one of these things to actually go and look for a store. I used to neglect doing that. I just didn't think it makes much sense, but it can help you understand the brand just a bit better, even if it's very subjective. Something that I, coming back to the story, really liked about the new management team and the newfound focus on the core product was also mentioned in its slogan, which was classics never go out of style. And part of why we spend so much time today walking through the company's history is that we want to find out whether Crocs is actually a classic or just a short-term hype. And to me, it's vital to understand how Crocs overcame the first huge drawdown to assess whether, that could happen again. I thought the same way about Lululemon. Shawn would rightfully tell me that I don't understand the brand at all if I fear Lulu is a fad. And I'm quite confident it is not, but I tend to get very skeptical with fashion brands, especially when their numbers, and we will get to Crocs numbers, just look phenomenal. Most of the time, they look great in a hype cycle before rapidly declining. I would need to get the feeling that Crocs is actually here to stay before I could get comfortable investing in it. And that's why we look exactly at what caused the first downturn, how did they get out of it, and whether they position differently now.
It's so hard to find like-minded folks who speak the language of value investing. I know most of my friends and family are tired of hearing about my stock picks, so that's why we created the Intrinsic Value Community. It's a vetted private network for sophisticated long-term investors who care about deep research, sharing actionable investment ideas, and making meaningful connections. After a certain point, reading yet another value investing book only helps so much. Beyond actually getting my feet wet in picking investments, nothing has helped me more than getting feedback from a peer group of passionate investors who have supported my investing journey over time. From community debates about investment opportunities to calls with industry experts who share their unique strategies and insights with our members, it's a special group that I couldn't be more grateful to have been a part of. Spots in the community are limited though, and our latest cohort of 30 members filled up lightning fast, and our upcoming cohorts will probably be even smaller. If you want to take the next step as an investor, then go ahead and join the waitlist for our Intrinsic Value Community at theinvestorspodcast.com/intrinsic value community. That's theinvestorspodcast.com/intrinsic value community. What do you keep in your cupboards? If the last few years have taught us anything, it's that food shortages can happen fast. Empty shelves, inflation, supply chain failures, we've seen it all. I remember walking the nearly empty aisles of our local grocery store in 2020. It was a scary feeling that I'll never forget. As is true in investing too, it's best to be prepared, not surprised. Don't rely on grocery stores who always have what you need. A Harvest Right home freeze dryer can help you prepare for minor or serious food shortages. And with a freeze dryer, you can preserve your favorites. Freeze dry meals, snacks, fruits, and even ice cream, so your family always has real food, no matter what happens. The best part is it's affordable and easy to do, so stock up now while you can. It's a simple, affordable, and tasty way to secure your food supply for the future. With a Harvest Right freeze dryer, you're not just storing food, you're protecting your family. It's peace of mind. Learn more by visiting harvestright.com/investors. That's harvestright.com/investors. Hey guys, this is your host of the Intrinsic Value Podcast, Shawn O'Malley. Just like everybody else, there was a time when I was a beginner investor, and I have to say, investing is particularly filled with jargon that can just make it so difficult for new investors to understand what is going on. But it's never too late to get smarter about stock investing from the ground up. At the Investors Podcast Network, we've made a habit of studying the world's best investors, and now I'm distilling those learnings into a simple course for you, or for anyone in your life who you might want to share the gift of knowledge with. With my How to Get Started with Stocks course, you can master the principles of excellent lifelong investing with valuable insights for both beginners and pros. The course covers 10 different sections, beginning with the basics of what a stock actually is and how the stock markets work, to strategies to optimize your retirement savings, how to pick great companies for the long term, what to look for in ETFs, and how to monitor your investments, plus so much more. To begin getting smarter about investing, just visit theinvestorspodcast.com/get started with stocks. That's theinvestorspodcast.com/get started with stocks. And for a limited time, you can use code STOCKS15 for a 15% discount at checkout. Well, for the sake of our shared portfolio, I hope that Lulu is not a fad as you fear, but I do think that the difference where I would be confident in calling Lulu less of a fad is that the brand never really fell off after hitting the scene a few years ago. And we go over the reasons why in that episode pitch that we did for them. But demand and growth have been steadily up and to the right for really 2 decades now, without the same kind of blips that Crocs has seen. And I didn't realize before that Crocs had expanded into so many different product lines. But the other difference is that for the most part, Lulu has successfully expanded into new areas in a way that Crocs, I don't think, has. And not to say everything about their wider catalog is working great, but they've succeeded in branching out into menswear, for example, and in selling things like hoodies and sports bras beyond the original yoga pants that they were initially famous for. And so not to say Lulu is invincible, but I have been impressed in how they've been able to prove their staying power over time. And for me, I think the moment I realized that Lulu was here to stay was probably when I found myself happily spending a couple $100 on their men's clothing myself, with many of my friends doing the same after thinking it was a brand only for women for about a decade. So I don't know what kind of black magic they did, but the marketing they did toward men about 5 years ago it turned out to be very effective. Or maybe I'm easy to sell to because it certainly worked on me.
Well, maybe then we are one step closer to buying Crocs, because as I said, they got me as a customer now. Now only my friends have to follow up.
Yeah.
Well, I often say sometimes all it takes is, some social proof or influence. Hard to say whether Crocs is there or not. It's loved by many, but it's also hated by many. So it's difficult to say. What even brought them back on the map in 2016 weren't all those saving measures, although they helped, but what kickstarted for Crocs was the London Fashion Week in 2016. The Scottish designer Christopher Kane decided to basically build his entire collection around Crocs. As far as I know, there was no paid marketing from Crocs' side involved there. It was just a designer who saw potential in the style and then used it for his show. And this generated a great deal of headlines back then. And I know I'll come across as someone who doesn't understand fashion now, but I find it amusing how there's, a general narrative in fashion that something is considered ugly and unwearable until a famous designer comes around and says otherwise, and suddenly everybody just loves it. It's not only Crocs that made a comeback, also Ugg boots, Birkenstocks, or Teva. I guess you can take that as either a good sign or a bad sign. When the entire clogs and sandals industry is popular at the same time, it's either a fad or it's a long-term shift in clothing habits. And when I look at the durability of Birkenstock sales growth, it doesn't look like a fad. And mind you, these were called grandpa shoes for an eternity, at least here in Germany.
I think they had a similar reputation here in the States too. Perhaps the clogs in sandal space is a good example of what we briefly touched on in our Nike episode about how retail has become much more segmented. And 20 years ago, there were only a handful of clothing or fashion brands that decided what the current trends were, might be fair to say. And today, maybe because of social media and TikTok, it just feels like there's so many different players and so many different niches in the clothing world than there used to be. And so popularity in clogs or sandals doesn't replace other parts of the market. They kind of coexist together. And the fashion world has become a lot more individualistic or custom tailored, you might say. And Crocs benefits from that really as much as any other brand. Customization of Crocs is a big part of the story here, I believe. And I'm pretty sure I've seen everything from just standard colored Crocs to KFC themed Crocs you were showing me offline before our call with fried chicken on them. So this is not a product that people are afraid to layer their personality and some humor.
The KFC ones are really beautiful, right? No, but I think you mentioned a great point. I think we even talked about the music industry in the Nike episode as another example for how markets have become much more segmented by now. Thanks to Spotify, there are thousands of new musicians that would have never made it on the radio. What people listen to nowadays is much more diverse than in the days of radio, and it's somewhat similar to fashion, as you mentioned, mostly because of social media and especially TikTok. But getting to the customization part of Crocs, you can put so-called gibbets on your clogs, and I might overstate their impact, but I think those are extremely valuable and an extremely attractive part of Crocs' business. For anyone who doesn't know Crocs at all, they typically have ventilation holes, and gibbets are these small little plastic figures that can be attached to your Crocs. It was actually not Crocs itself that came up with the idea. They were created by Sherry Schmelzer, a stay-at-home mom who wanted to make the family's Crocs a little more aesthetically pleasing. And those little decorations quickly became a local bestseller, prompting the company Crocs to purchase the company for $10 or $20 million. There are different numbers out there whenever I look that up. To me, it sounds a lot like gibbets have now become a vital part of the company. They account for 8% of sales and they have extremely high margins. So their share of profits is significantly higher than their sale share. And I believe they're a huge part of what makes Crocs so special. People love to collect and customize things. And I don't know a single shoe brand that does it as well as Crocs does it. There are these little Chinese plush toys called Labubu. I don't know if you've ever heard of them, Shawn, but they are highly popular with teenage girls and younger women. PopMart is the company behind them, and PopMart is now valued at $40 billion. To be fair, they also sell many other toys, not only the Labubus, but the point is, collectibles have huge pull on consumers, and if they are customizable, that makes it even more sticky. And according to Crocs, about 3/4 of their customers also buy gibbets. And you can really buy anything as a gibbets. Disney characters, Pokemon, sushi rolls, initials, everything you can imagine.
Unfortunately, I am familiar with Labubu. My 9-year-old niece loves them. I actually got a tutorial on Labubu just the other day, and I have seen these gibbets. I didn't know what they were called for years, but you're right. I never really thought about it, but they are everywhere. And I just think Crocs does a really good job of doubling down on collectability, which kind of goes hand in hand with the customizations they do. It's not only the gibbets, but you have these limited edition Crocs that can sometimes sell for multiples of the retail price online. So there's a real collector culture here too. And I know they work with all sorts of different franchises and celebrities too for some of those limited edition versions they sell.
Yep, absolutely. I even found some Crocs that I know you will love, Shawn. There's a limited edition NBA All-Star version, and it's also an absolute steal if you ask me. For less than $700, it could be yours, Shawn. But you have to be fast because there are only two left on StockX. So if you want them
It's
to
a good price.
it is. It's a steal, like I said. But yeah, the list of special editions and collaboration just never seems to end. From celebrities like Post Malone, Justin Bieber, Nicki Minaj, Bad Bunny, or Scissor to food brands like McDonald's, Pringles, Taco Bell, or, as you mentioned before, KFC. But also fashion brands like Levi's, Balenciaga, and MCM. Like I said, it just never stops. They even have one with G-Shock, where there's an actual watch on the shoe. Crocs have increasingly become just a canvas for self-expression, whether through gibbets or creative designs. I know all of that sounds a bit like cliched marketing slogans, but when I see all these things, I personally can totally understand why so many people like them, and I can see how they might become a classic at some point. And yes, when I started learning about Crocs, I would have also never thought I would say this at any point.
Maybe one day we'll get an LVMH Crocs crossover. I'm not holding my breath, but maybe we'll see it. When we've talked about other fashion brands or even beauty retailers like Ulta and Estee Lauder to a different extent, we also mentioned how important social media has become for driving those sales. And just to emphasize it again, I mean, this customization and the gibbets and the special editions, especially for how funky or quirky a lot of them are, it's just ripe for internet virality. So as much as I have probably bet against the Crocs brand for years, kind of in hindsight, I'm not as surprised because a lot of this stuff, it looks great on Instagram and TikTok. It's funny, it's relatable, and it's fun.
When I asked myself why I didn't know about the hype cycle of Crocs before, the answer is pretty obvious. I don't use TikTok. And TikTok is where Crocs really has made a significant amount of business. So perhaps people in the comments will tell me I'm talking nonsense now, but from all my research, Crocs does a very good job on social media. On TikTok, the hashtag Crocs has been used billions of times, filled with gibbet hauls, collab unboxings, and fit checks. And not too long ago, TikTok Shop was introduced, and it has quickly become one of the dominant e-commerce players. Although it was only launched in the US last October, it has already attracted nearly 50 million shoppers with an average spend volume of $32 million a day, and its global gross merchandise volume has doubled year over year to exceed $30 billion. I say all that because Crocs has become the #1 selling brand on TikTok Shop, according to Crocs CEO Andrew Rees. I actually couldn't find any official rankings though. I don't think he lied, but perhaps he's talking about a certain time frame or a certain category, or perhaps both. The products, though, and collabs are an obvious part of why they work so great on social media. But they also have a lot of humor that works well. They don't take themselves too seriously as a brand. And as they say, you either love or you hate Crocs. And they really double down on that with every marketing gig they post on social media. Apart from the collaborations, the lockdown tailwind, and fashion shows, another macro tailwind has been the athleisure trend that has also benefited Lulu, and perhaps even more Lulu than Crocs. Industry forecasters peg the global athleisure market to be around $340 billion in 2024, growing at a double-digit CAGR over the next few years. So it's a huge market. That's nearly triple the expected growth for traditional apparel. Now, you are more knowledgeable than me about the athleisure trend, Shawn, but perhaps you think Crocs is something totally different. But I think it's undeniable that there has been a significant shift among Gen Z towards more unconventional ways of fashion, and that is not a fad but here to stay. Crocs are the perfect way to express yourself, reject rigid dress codes, and they are more adaptable than any other fashion product I've ever seen.
When I started researching athleisure for my pitch on Lululemon, I don't think I ever would have thought about classifying Crocs as athleisure, but in a weird way, I can kind of see it. Athleisure is sort of a rebellion against the status quo that pushes back against conventional social norms. And yoga pants and Crocs have both rewritten those social norms in the past few decades, I'd say. And you're probably not going to wear Crocs to Whole Foods or Starbucks like with Lulu. It's maybe not an upper middle class branding like that, but it's definitely a very functional brand that is both casual and then also stylish in a way now. And it's fun. It's kind of hip. So yeah, maybe the athleisure comparison works better than I'd like to think. I mean, I see where you're going with it.
I think there's just this overarching trend of, as you said, a rebellion against the usual norms of what you can wear, and Crocs fits pretty well into that. I wouldn't wear them to the gym, but I think the main part is being different when you wear them. And I see a lot of people my age wearing them, and those are the people who, at least supposedly, have a lot more fashion sense than I do. And I think that's kind of what Crocs is going into. Still, they see their total addressable market at around $160 billion annually. So that's a lot more than just a niche little market for people who want, to start a rebellion. And that includes casual sneakers, sandals, and clogs. And judged by the $4 billion in revenue they currently make, this results in a market share of 2 to 3%. I personally do not think Crocs' market is actually that big, since I see too much competition in the casual sneaker space. And that's a significant chunk of the TAM if they talk about $160 billion.
When you get your pair of Crocs, Daniel, I hope that we can show them off on camera for the audience to see. I think that would be a great way to show that, we actually, we walk the walk. Sometimes we buy the products we talk about, but we've gone on a few tangents now, but we should quickly get back to the turnaround story. And I think time-wise, we landed in the late 2010s. So London Fashion Week brought Crocs back on their feet, and all these brands and celebrity collaborations followed, just reinforcing the hype.
If we want to call it a hype. I mean, honestly, I'm fully aware I could never sit here with a straight face and question the longevity of Lulu while arguing that Crocs might not be a fad.
Hopefully there's room for both in the world, Lulu and Crocs.
Hopefully, at least if we choose to invest. Otherwise, I'm totally fine with just having Lulu and their growth story. But what you have to give them credit for, and I'm talking about Crocs now again, not Lulu, is how they chose their partnerships, ranging from everything I mentioned, like Pringles and McDonald's, to fashion shows for Balenciaga. They really approached every customer possible. Another thing is how they stayed relevant even after the pandemic. In the pandemic years, with all the lockdowns, Crocs seemed like the clear winner. Many people used them as house shoes, but instead of seeing their demand decline since then, it's on a clear upward trajectory. It's kind of like they took the first hurdle, surviving after lockdowns, and now it's just about really establishing them as a classic.
And what's the plan to take that next hurdle and really make Crocs a brand that won't go out of fashion again, like what we saw in the 2000s? And I guess from everything you told me, the turnaround seems to be based on narrowing the product portfolio and then doubling down on the classic clogs. But then in 2022, Crocs made this very interesting acquisition of HEYDUDE, which is a shoe brand that's more focused on comfort, just like Crocs, but with much more casual looking shoes. And I guess that's maybe part of the strategy here, is to try to break into a larger TAM and gaining market share in the casual sneaker space. But then at the same time, these previous diversification attempts under the old management didn't work out very well. So I'd be curious to hear your assessment of this strategy shift.
You're not the only one seeing a problem in that acquisition. Crocs paid $2.5 billion, and many thought that's too much money, especially considering the company's significantly weaker brand and product offerings compared to Crocs. Now, on the price, technically, I would say they didn't necessarily overpay, at least not badly. They paid 13 times earnings, which was an okay price for a business like HEYDUDE. You could argue, though, that $2.5 billion was just too much in absolute numbers for Crocs. Crocs itself is only valued at $6 billion, and while it was valued at over $10 billion when the acquisition was announced, the announcement itself caused the stock to plummet, and only 6 months later, Crocs was worth $3 billion. So overall, I would say they reached a bit too far, but that is a thing of the past, and the more important questions today are why you buy another brand in the first place, and more importantly, did it work out since then? And your instinct was right that the idea was to diversify. That didn't work the first time, but we're now talking about a much more established company. And the product fit is pretty good. HEYDUDE's signature products, the Wally and Wendy, are lightweight, casual slip-on shoes that are equally controversial as Crocs. I've read a lot of criticism on them online from people who find them straight up ugly and others who like the look a lot. Although I'm not sure if there might be a negative bias whenever you look anything up on Reddit. I don't know about you, Shawn, but I don't find them that ugly. They're not the best looking shoes I've ever seen, but to me, they just look, I don't know, pretty average.
So yeah, that's what kind of bothers me. If for better or worse, Crocs are incredibly unique to their credit, but the Hey Dudes just look so plain in contrast. I mean, there's nothing at all exciting about them visually, and I'm kind of surprised they even. This sounds harsh. I'm surprised they even catch enough attention to be controversial in the first place. But you should tell me. I mean, you're the expert here. How has this integration of Hey Dude gone? Because again, it looks questionable on paper. It seems like a totally different type of brand to integrate, but maybe it's worked out better than I'm giving them credit for.
I thought you would have a different angle here because I see it the exact same way. These shoes, I don't know how they are controversial. They are just the most average looking shoes ever. And I don't think that's perhaps the best acquisition for Crocs. I would have expected them to double down on any other unique shoe brand. But yeah, the short answer to how is the integration of HEYDUDE going is not too good. I feel like we are repeating the same story over and over, but HEYDUDE just grew too fast. And when demand slowed down in 2023, inventory started piling up, retailers had too much in stock and wanted to get rid of it. And since then, revenues are in decline, a 13% drop in 2024 and a 10% decline in the first quarter of this year. Recently, margins also came under pressure, but that's just the first sign of the new strategy implemented by the new president, Terrence Riley. He has experience in scaling up fashion brands, and his plan for HEYDUDE is to simplify the product, basically what they did to Crocs 10 years ago, and strengthen the DTC game, invest into the community, and basically building the same type of controversial but knowable brand like Crocs. That started first with cleaning up the assortment and expanding their own footprint. 38 new premium outlet stores opened last year. They have begun launching direct-to-consumer markets in the UK, Germany, France, India, and Australia. And on the community side, HEYDUDE recently hosted its first ever Super Brand Day on TikTok, ranking #1 among footwear brands on the platform on that day. I don't know how much that says about the brand, but still. And just like Crocs, they focus heavily on brand ambassadors like, for example, Sydney Sweeney.
Well, that's good strategy because we just saw American Eagle stock pop on the announcement of a partnership with Sydney Sweeney. So she seems to single-handedly be able to move entire brands and stocks by herself. But getting back to kind of the fundamentals here, I'm curious how it looks on the DTC side, the direct-to-consumer side for Crocs. And I feel like I keep invoking Nike and Lulu, but they're companies we've both covered in depth on the show. And as we know from those stories, selling wholesale versus selling directly to customers can have both major business and brand implications over time.
Yeah, it's a good point. Crocs DTC shares about 50%. For HEYDUDE, the number is slightly lower at around 45%. But the DTC sales at HEYDUDE have been growing 8% year over year, even while wholesale declines. And average selling prices have grown for 7 consecutive quarters, so that's why I say the turnaround looks pretty good. They are selling fewer shoes though, and at better prices. That makes sense, but we will still have to see if the top line can actually grow further. But getting back to DTC, so Crocs is not like Lulu, which has full control over how they portray and sell their brand, but the shoe industry generally has lower DTC share than most fashion brands. On, for example, which is a premium shoe retailer we also talked about when we covered Nike, has a DTC share of about 48%. Birkenstock is at slightly less than 40%. And the industry giants like Nike and Adidas have long-term goals of 50%. But like I said, Crocs is already there. HEYDUDE is still a work in progress. But overall, its numbers are pretty good as well. High DTC share and high margins. But compared to the stronger Crocs brand and considering the price Crocs paid, it is understandable investors are skeptic. So the status quo in my mind is that the acquisition has done currently more damage than good, but management is quite optimistic that they will turn this around. And I kind of see it as optionality in the future.
Talking about margins and buybacks, how about we go deeper into Crocs' financials and capital allocation?
Sure. So in 2024, Crocs reported just over $4 billion in revenue, growing mid-single digits year over year. And about 80% of that came from the core Crocs brand, which grew by 10%. As I said, HEYDUDE declined by 13%. And at the end of the year, they only had a bit more than $800 million in sales. What makes Crocs stand out is their really excellent margin profile. We talked a lot about Lululemon's superior margin profile to competition in their episode, but Crocs is right there as well. Both companies have gross margins of close to 60% and mid-20s operating margins. Crocs is actually slightly higher than Lulu there. Part of the reason is the asset-light business model, the vertically integrated foam production, as we talked about earlier, and of course, the strong pricing power. When we discussed Lululemon, I mentioned that retail brands with significant pricing power that are not true luxury brands tend to lose that power over time. Not all of them, but most. Now, it's impossible to know in real time which brands can sustainably take higher prices and earn higher margins. And the question also is, what does sustainable mean? Where do you draw the line? Lulu has shown these outstanding numbers for over a decade, almost 2 decades. At that point, calling it a fad is very difficult. Crocs has survived the end of the lockdown era. That has to count for something, but we are still only talking about 3 to 4 years of actually superior performance.
The returns on capital look pretty solid too, and not as good as Lulu, but still significantly better than what Adidas has to offer and also higher than Nike. And the difference is that when you look at the graph that we're showing on screen right now, you can see that Crocs' ROIC was negative back in 2016. And so we discussed it a bit already, but it shows once again that compared to these other companies here, Crocs arguably doesn't have the same moat because they've been delivering these excess returns on capital for only a few years and it's inconsistent.
Yeah, that's kind of the risk that you have. But right now, numbers are undeniably strong across the board. When we look at the free cash flow margin, Crocs is by far the strongest company, boasting a 22% free cash flow margin that generated $920 million in free cash flow last year in 2024. A lot of that has been reinvested into buying back shares. Since 2023, the share count declined by almost 10%, and just in February of this year, Crocs added another $1 billion to its buyback program, which means that now there's a total of $1.3 billion authorized for buybacks, and that represents about 20% of the company. At the current market cap, that's, I would say, pretty attractive. Last year alone, they bought back over $560 million worth of shares, and in the first quarter of this year, they repurchased shares worth about $60 million. So it's hard to say at what speed they will buy back shares going forward, but based on the current stock price and assuming that free cash flows remain stable, I would assume it will be paid out over the next 2 to 3 years. The management said that they will be opportunistic about buying back shares. So if the multiple goes up, they probably won't buy, or if the price goes up. If the company or the price stays low, they will probably buy back shares. The other pillar of capital allocation, though, is paying down debt. In 2021 and 2022, mostly due to the HEYDUDE acquisition, Crocs issued about $3 billion in debt, which is a lot for a company of their size. However, they were very focused on paying it down as quickly as possible, cutting their debt in half since then. Management committed to a net leverage range of 1 to 1.5, and they are right back in that range again. So that's why I think the buyback program has been expanded and is probably the main focus going forward.
Yeah, I mean, the HEYDUDE acquisition, it sounds like it explains it because I was trying to figure out how for a second there, this company with a $6 billion market cap could have $1.5 billion in net debt and also still be profitable because you wouldn't think that, that you think they would finance the business with their own earnings and not necessarily need to take on all that debt. And so given interest rates at the time when they made that acquisition, I'm sure it seemed much more cost effective than it would now to do that kind of deal. But man, it still looks like such a huge commitment of capital to a brand is almost the opposite of Crocs in a lot of ways. And it's just totally lacking the same flair and personality. So I find it disappointing. It doesn't make sense to me. But at this point, HEYDUDE is part of the company now, and there's nothing I can do about it. And on paper, the valuation multiple for the overall business looks very low. And whether that's HEYDUDE diluting the value of the overall enterprise and the multiple that investors are willing to pay for it, or just some sort of diversification going on, it's hard to say. But before we get to the valuation more in detail, though, I think we have to touch on Crocs's Asia strategy and really what's going on in China. And you mentioned before we started recording that Crocs is starting to look a lot like Lululemon with its early success there, as if we haven't invoked Lulu enough on today's call. But there has been rapid growth in China. And more importantly, it's full price growth, meaning the expansion isn't just being driven by heavy discounting, but it's actually people are paying full price for this stuff. And it's not dragging down margins to grow incrementally in these new markets.
That's right. Whenever we want to figure out where the next big wave of growth is coming from, it seems like we have to look east, at least, or particularly into China. That's where growth is coming from for most fashion brands nowadays. And Crocs management describes China, South Korea, Japan, India, and the core of Southeast Asia as their so-called Tier 1 markets. International Tier 1 sales increased by 20% in 2024, expanding the Crocs brand's international mix from 38% overall 2 years ago to 44% today. And unsurprisingly, China is the biggest contributor and the second largest market behind the US overall for Crocs. Sales grew an astonishing 64% in 2024 and was still more than 30% growth last quarter despite that difficult comparison. And when we discussed Estee Lauder, I can still remember I said that the time when Western brands can just go into China and succeed just because they have kind of a foreign flair to them is over. And that's where Crocs, with the extreme level of customization, in my opinion, does have huge advantages. Their China products have tons of local tweaks, other colorways, different franchises and collaborations, different gibbets. The shoes can look completely different from the US or even European editions. And in terms of sales, Crocs chose a digital-first approach with a DTC focus. So Douyin, which is the Chinese name for TikTok, JD and Tmall, account for the bulk of sell-through in China. And thanks to the DTC approach, gross margins are very high as well. As you said, it's full price growth. The gross margins reach 60% just as they do in the US. And despite the digital-first approach, even their store count is growing quite fast as well. Just last year, the store base increased from 36 stores to 51. That's a lot of growth in relative terms, but of course, part of the truth is that they are at the very early stages of expansion. Lululemon has about 90 more stores, if I'm not mistaken, and we don't even need to talk about companies like Nike. For them, 50 stores would be, nothing more than a rounding error. Having said that, as we said prior, it seems like Crocs' strategy on their DTC channel is less to build a lot of stores and mostly about selling digital.
It does seem like betting on China is even more material to the story here than with Lulu, and it was a big part of the story with Lulu too. And I'm sure that hasn't helped sentiment around the stock recently. Anything connected to China has really fallen out of favor, but years of suppressed Chinese consumption and all these horror stories about growth plans in China falling very short of the ambitions that various Western brands have outlined to investors over really the last decade. I actually kind of think it's maybe a good time to be contrarian and think that, okay, well, that pessimism is probably more than baked into the stock already, such that if things actually do continue to work out for Crocs longer term in China, that could be a huge boost, obviously not just to the business, but actually to the share price, because if the market isn't giving them a lot of credit for this business line and it continues to be substantial and growing, that will need to be reflected in the valuation at some point. Anyways, I am curious about the rest of Asia. South Korea and Japan usually move early on fashion trends. That's sort of my understanding. And they've got that mix of streetwear culture and comfort first style that feels like it could be a natural fit for Crocs. And so I wanted to ask you, are we seeing the same kind of momentum in those markets, or is it more of a slow build up there? And then we shouldn't overlook India, because it has this massive consumer base and a growing middle class too. So maybe if you can speak to that as well, whether Crocs has started to make inroads there, or is that more of a longer term opportunity? And while also on the topic, maybe you can speak to whether this is just a push for the Crocs brand, or if HEYDUDE is also getting involved in Asia.
Yeah, it's easy to see how expansion is a pretty big part of the thesis here. So South Korea already has 95 company-owned stores. Japan is only at 21. And in both markets, revenue is growing at high single-digit to low double-digit rates. And the margins, just as in China and in the US, are quite high, also about the 60% mark at gross margins. And since Crocs is operating the same DTC and digital-first approach everywhere they go, I think that's what we can expect whenever they expand into other markets. South Korea is viewed as a more mature market than Japan, though. The market share is even larger than in the US. It's about 2 to 3%. And Japan is still considered one of the growing markets. And since production is in Asia anyway, I think that these sales don't face any tariff headwinds either. So there's less uncertainty, at least on that front. As you said, macroeconomics are still another thing. Crocs is also building a design hub in Shanghai in the back half of 2025 to produce China-exclusive collaborations at the speed of local street culture. It's similar to what we have seen with Estee Lauder as well, who actually moved design hubs, or at least research hubs, into China directly. India is now also part of those tier 1 markets. Last year, there was a soft launch on big Indian marketplaces, and product-wise, management is mostly leaning into sandals and the Brooklyn wedge, which is a certain family of Crocs. Asia's long, warm seasons, they just make it sandals territory 9 months of the year. So that's a natural market fit for Crocs. And they use, as always, the same celebrity playbook over in India, over in China, over in South Korea. Famous actress Rashmika Mandana is the face of Crocs India campaign, and she has over 45 million followers on Instagram. And as far as I know, she's one of the most popular celebrities in India. However, regarding HEYDUDE, they don't really want to go the same route yet. The plan for that brand is to primarily focus on stabilizing and growing the US operations, and only then expand internationally. The first markets will be those where Crocs is already established and can help them, even more so than going into Asia without any huge infrastructure there already. And these markets are the UK, Germany, France, and Australia, with India also on the list, but mostly far into the future.
Well, how about we talk a little bit more about Crocs' balance sheet and financial health before we get to the valuation, which should be next. And one of the things I looked at with Lululemon was their cash to sales ratio. And their trend for them has basically been that they have less and less cash on hand relative to sales as the business has grown. And that is not necessarily what you want to see, but there are also a lot of reasons that can happen, and it can have to do with buybacks. And so how does that, and really more broadly, inventory turnover look for Crocs?
Crocs does show a similar downward trend, and its cash to sales ratio is actually only 4%. For Lululemon, it was at least 12%. However, as in Lululemon's case, and even more so here actually, buybacks have played a pretty significant role in recent years. Buybacks obviously lower the cash balance, but when done at the right prices, as I would argue is the case with Crocs here, they are great for shareholder returns in the long term. And another reason for low cash to sales ratio has been the cash spent on reducing debt after the HEYDUDE acquisition. And once again, I think that's a valid reason to spend cash. As a shareholder, I would prefer them to pay down debt as fast as possible, at least if we see those high debt levels compared to the market cap. Another factor to consider when investing in a fashion retail brand is its cash conversion cycle. The cash conversion cycle essentially indicates how long it takes your goods to be converted into cash. So when Crocs orders a new shipment of these high fashion NBA clogs, how long does it take on average until those NBA clogs are turned into cash? And historically, Crocs' cash conversion cycle has shown some volatility, but generally trended downward, indicating improving efficiency in converting products into cash, a key sign of disciplined working capital management and also tight control of inventories, which is something that the management definitely prioritizes. Recently, though, we've seen a notable spike, and while Crocs intentionally built up inventories like most fashion brands due to the fears that tariffs could materially increase import prices, the biggest factor was a sharp increase in accounts receivable, so basically the money Crocs is still waiting to collect from customers. And management hinted that some wholesale partners are taking longer to pay than usually because possibly they face some liquidity pressures in retail and also, of course, uncertainty around the consumer. At the same time, Crocs paid suppliers a bit earlier than usually in Q1, and that's kind of accumulating at the same time. So inventory is not really sitting around longer in warehouses, which would be a bad sign for demand. In fact, Crocs is once again, I have to say that, best in class in terms of turnover as well. So they currently turn around inventory about 4.5 times a year, well ahead of Adidas, Lululemon, and also Nike. And it's the only brand in this group that actually improved on this metric over the last couple of years. So the spike is mostly caused by timing, working capital frictions, and front-loaded inventory shipments. But management expects this to normalize throughout the years as the payments come in, and inventory levels normalize.
Well, I think it's time for our favorite part of the show, and that is valuation. And I think this will be an interesting one because it's been such a popular pick in the value investor community. And partly I think it's because it just screens so well. You look at the profitability, returns on capital in the last few years, the revenue growth rates, and then you look at the multiple, and it's like, you can't help but ask yourself, how the heck is this thing trading at less than 9 times earnings per share estimates for the next 12 months? It's hard to reconcile with what's actually been going on with the business.
It's true. As soon as you start a screener, one of the first stocks that will always come up, at least if it's value biased, I would say, it's always Crocs. That probably also explains why it's all over the comments in our comment sections on YouTube, Spotify, basically wherever. So getting to the valuation, in my base case, I assume that nothing spectacular happens, but the brand just keeps executing as they did over the last couple of years. So revenue grows between 5 to 6% annually, driven primarily by growth in the international market and particularly, as we mentioned, in China. And the North American clogs market is already fairly penetrated by Crocs, so I expect modest, maybe 4% growth in that market, combining volume and also price increases. Judging HEYDUDE is pretty difficult since we haven't yet seen it operate after the restructuring. However, Crocs management still believes in the brand and the turnaround, and they seem pretty reasonable and realistic with the description of the current state, so I kind of trust them going forward as well. It also reached the 3rd place on TikTok store, which they don't shut up about, basically. So Crocs reached number 1, but it's still a good place for HEYDUDE to be at. So they definitely know how to play the social media game, and I do think this will help them in the long term. For 2025, I still assume a high single-digit sales decline for HEYDUDE, followed by a slow recovery, which leads to low single-digit growth over the entire 5-year period. In terms of margins, I assume they are more or less maintained at the current levels. If we compare it to Crocs and they kind of get the same synergies going and the operating leverage, they might increase, but I don't want to bet on that, at least not in a base case. And like many of our portfolio companies, Crocs is also a buyback story. I've used the same valuation mechanism as in my PayPal model, where there's basically a table showing you at what prices the company might buy back shares in the future and how much of its earnings they would have to allocate for that. If their earnings power persists and the stock keeps trading in a multiple range between 5 and 10, those are the multiples I've used for this table, it should be relatively easy for Crocs to retire 3 to 5% of shares each year. And that alone, like single-digit growth, maybe mid-single-digit growth, plus the share buybacks, with a slight earnings multiple increase from 6.5 to 8 times trailing earnings and an 8% discount rate, as always, plus a 20% margin of safety, just due to the uncertainty surrounding Crocs' sustainability as a brand, I still arrive at an estimated fair value of about $105, and more or less, that's exactly in line with the current market price.
And if we indulge our inner bull, I'm sure things will look better. But how about you paint that picture, the best case scenario for us?
Yeah, it's always more fun to paint a best case scenario than a base case or even a bear case. So in my best case scenario, the international business really kicks in. I assume 15% growth for the international business and a slight increase in the base case for the North American business. HEYDUDE reaches double-digit growth as well, but only starting in 2027, so after the restructuring, which will almost certainly happen and take a lot of time. So I didn't bet on a lot of further margin improvements, though, because I feel like the current margins are already pretty high. There are few to no other shoe brands that can deliver the same margin profile, and with the exception of HEYDUDE, I think most of the operating leverage has already been achieved in the past few years. So in this case, I see a share decline rate of 5%, so basically the upper end of the 3 to 5% that I beforehand already talked about, and an exit multiple of 11. So a bit more of a exit multiple expansion. And when Crocs hits these growth numbers, the multiple should expand in my opinion, so it's only fair to kind of boost that a bit. And combining everything, this leaves us with a good amount of upside and a price target of above $190. But again, that's mostly driven by multiple expansions since I didn't really change growth or margin numbers that much.
And just for good measure, how about we do the bear case too? I guess that's where it's going to get most interesting here, since I think we both agree at the current valuation, there's plenty of room for upside, even if the business just sustains and doesn't really do anything special. And so really the fear is the downside of how bad things will be if the business really meaningfully erodes and Crocs starts to look like a fad?
So the premise of my bear case has been to basically determine how much Crocs would be worth if we assume demand is significantly weaker and the business basically starts to decline. Then this would turn into a full-blown buyback story without having a great business basically producing more and more cash flow each year. So I kept the 4% share decline rate in place, and as you can see in the model, this should still be possible to finance for Crocs despite almost 10% declines in net income and no growth in revenue, which are my assumptions for the bear case. If I do all that, I still arrive at those outcomes by reducing gross margins to 50%, a level they had prior to the pandemic, and an operating margin of 18%. And just to say it, 18% is still way above the levels that they've seen just 5 years ago. With no multiple expansion, but also no decline, since it is already trading at a very cheap multiple, I arrive at an estimated value in the mid to high 40s, and that would be about a 60% decline compared to the current levels. So all in all, it's really a question of whether Crocs is here to stay or just a fad. And similar to Lulu, with the main difference being that you and I are very confident that Lulu is way beyond the point where you gotta ask yourself whether it's a fad. And the numbers suggest so as well. Lulu has delivered for over a decade, probably more close to 2 decades, what Crocs has only shown since the pandemic. And as value investors, we want to minimize downside risk first and then think about the possible upside. The upside is unquestionable in this case, but at over $100, there is also the risk of Crocs losing its flair. And I think there's definitely an argument to make to buy it at $100, but having not too much conviction into the brand, I do not see it every day, just like you see Lulu every day. I think I would wait for a price a bit lower than these $100.
I think this is one of those cases where if you genuinely have conviction in the brand and the products, there's probably enough of a margin of safety to justify making a bet at current prices. It's such a low multiple, even though the business could fall off dramatically. And I think Wall Street is already kind of predicting that over the next year or so, expecting 2025 and 2026 to be much less profitable than 2024. It still does feel a little picky to say that we need another 20% decline to be interested. But I also don't know the company as well as you do. And we do already have some brand specific retail bets in our portfolio, including Nike and Lulu. And then on top of that, you have Ulta, which is a more diversified beauty retailer, but still is very much in the retail business. So I don't know. I think if you wanted to, Daniel, you could probably talk me into a position in Crocs at this valuation, especially if we can dig up some more consumer level data on the brand. So for example, you probably don't have this off the top of your head, but I would be so curious to know what percentage of customers return as repeat customers after an initial Crocs purchase, for example. And is the product so good basically that people keep coming back for more? Or are these mostly one-time novelty purchases of, I bought these kind of funny, ironic custom Crocs and I'm going to wear them for a week, but I'm not actually coming back to seriously buy them. And if there were more of this customer retention, as we've seen with Lulu, I think that would be a much stronger argument for the brand's durability. So I don't know. I have mixed feelings. I think I'm generally a little bit more inclined to invest in retail than you, Daniel, but it sounds like you're not keen to take any action with this name today.
You talked about the consumer data, and that's exactly the kind of data that I would have needed to get that last level of conviction. But unfortunately, there is no official data on that yet. There are many customers who have half a dozen of Crocs, even more so, but those are not the average Crocs customer. So those are the people that have a personal connection with the brand or are actual collectors, and that's why they own so many Crocs. I would be interested in getting data on people who buy their first pair of Crocs and then see if they come back within a year or maybe 2 years to buy the next. And I think that's data that we probably only get perhaps in a year or two. And if I could see those average customers getting back to the brand, buying new pairs, I would definitely be even more inclined to buy Crocs stock. I'm buying my first Crocs right now, so who knows? Maybe I will buy my next pair of Crocs in 6 months, and then we'll definitely revisit this and say the product is so good that we will become buyers of the stock. But as you said, I think there's a good case to make that you could invest in the stock right now. Personally, I wouldn't feel too comfortable about the brand yet. And since I'm the one pitching and lack that bit of conviction, I would currently not advocate for initiating a position.
I'm thinking now that maybe I've got to get a pair. Maybe I'll get a TIP customized pair of of
That sounds
Crocs,
good.
and we can wear them to the Berkshire shareholder meeting in Omaha next year.
That sounds good. I mean, see, then we only have 2 data points that would suggest people could become repeat customers. I think that's definitely enough to buy the stock.
Twice as many data points as just you, though.
Absolutely. So I think that would make for a way better investment case, definitely. Then you can even save up on the next 20 hours of research. All right. Okay. Having said all of that, we should maybe stop with the joking. And why don't you give us the hints for the next episode and perhaps the next company we will add to the portfolio?
Okay. Well, I just to correct for the kind of aftertaste that Crocs can leave in one's mouth, I felt like we needed to do the polar opposite. So I went into something that is prestigious, it's got luxury, it's got sex appeal, it's kind of all there. But then also, unlike Crocs, is that the valuation is very, very rich. And so maybe as another hint, that was a little vague. This is a company with nothing short of a cult-like following. And really, this will maybe give it away. It has a history of dominating the sport of F1 in particular. So maybe that's too obvious, but I know there are a lot of people out there who actually may not know F1 Formula One racing all that well either. So maybe it's still hard to guess.
True. It's not too obvious, I would say. And I don't even know yet, but perhaps when the day comes that those 2 brands have a collaboration, the ones we pitch next week and Crocs, that will be the day when we start buying the stock.
Yeah, I agree.
All right. So I will leave you today with a bit of an unusual quote, but I thought about it multiple times during my research. So I just had to include it. It's by the fashion icon Karl Lagerfeld. And he said, quote, "Sweatpants are a sign of defeat. You lost control of your life, so you bought some sweatpants." Nowadays, sweatpants are everywhere. Many people thought the same thing about Crocs. Nowadays, they are everywhere. So let's see for how long. And with that, we will see you next Sunday. Like you said, Mercedes is like probably a company with like the best history that you can have, because I'm sure many iconic car makers have an interesting backstory to it, but only one can say that they invented the automobile. And Mercedes-Benz can. They are that one company. And that story goes back to 1886 when Carl Benz patented what's today widely considered the first gasoline-powered car. And it's called, and I will say it in German now because I have to play my home bias here, Benz Patent Motorwagen. The next 2 names I will drop are Daimler and Maybach. Both of them were German engineers, kind of at the same time as Carl Benz, but they invented their own engine separately from Carl Benz. And it was only about 40 years later that they merged those companies together. And then what you had was the Daimler Motorengesellschaft and Benz. And later on, that company turned into Mercedes-Benz, which is the company we're talking about today.